So, you know, I think we're just going to be giving you some ideas and some beginning discussion about this, and hopefully you'll want to keep talking about it and maybe bring us back another time or come to more things. I sort of start where Dimitri kind of dropped you off, which is that all the wealth building and economic policies really aren't about universal prosperity and not really about helping everybody, right? They're about allowing a small group to become wealthy and to do stuff and then complaining and disparaging the rest of us because we couldn't do it, even though the policies were made for a small group to do it. And so when I got involved in the wealth inequality area, I was trying to figure out, well, there's something wrong, right, with the whole model, really, right? Because it's not really made for us all to be prosperous, and yet that's what we all keep saying, at least some of us keep saying we want. I think all of us at this table, and probably all of you, want us all to be prosperous. But the policies don't do that. The policies instead have been much more about asset stripping, right, discrimination in markets, and disinvestment of communities. So then I said, okay, well, if we really want to look at whether it's racially or for women or for low-income communities, what would really make more sense? And because I also am a community economist, I do community economic development and cooperative economics, I thought, okay, let's really look, what if we take this sphere out of just looking at individuals and families and look at collective businesses and communities? What if we really tried to figure out how to create assets at those levels with real democratic participation in what you do with those assets, and focus more attention and policy on that instead of just trying to figure out how to get each individual person a little bit more savings or some equity in something. So that's what made me look at how can cooperative businesses be community assets, and what are the things that happen with cooperative business ownership, and particularly worker co-op ownership, that help us to think this more broadly about this community wealth building and real prosperity for everybody. And so, oh, sorry, that page was still about all the problems. I think I already moved to solutions, so let me get to a page with the solutions. So let me give you one example. Actually, I'll give you a couple of examples, but let me start with the credit union example, because I consider credit unions to be community assets. And why do I believe that? A credit union is actually a cooperative financial institution, right? It's actually owned, not that we all know this or operate this way, but it's owned by the depositors, meaning you and me who have an account in a credit union, and we actually vote on the board, or you should be voting on the board. And when you study credit unions, especially the community development ones, which Tom's already sort of mentioned, they really do create activities from their employment activities to their pro-savings and pro-consumer behavior in terms of their relationship to you as the depositor, right, are all really about giving access to assets and access to financial services and then sharing them broadly. So a credit union gives the depositors a little bit higher income on their savings, a little bit lower interest rate on the loans. They actually, when they're large enough to have employees, they actually treat their employees well, give them benefits, give them living wages, give them volunteer hours to do something in the community. Credit unions also give donations, right? They sponsor sports teams, they help support affordable housing projects, etc. So if you think about that whole combination of things that they do between what they do for their consumers, their clients, their members, what they do for their employees, and what they do for their communities, you can see why you think of them as a community asset. So they're pooling our scarce money, right? But they're pooling it and then doing a whole bunch of great stuff with it that then recycles back in the community and supports more and more community activity. So that's the notion I have about this community assets, and how collective ownership of something can then lead to community wealth that can then lead to a more prosperous local community. Housing co-ops, right, do a similar thing. They allow people to actually own an asset, a house, which is one of the major assets in a wealth portfolio. They allow you to do it without a whole lot of money and reducing the risk of home ownership but also allowing home ownership to become an asset. And we can make housing co-ops do even more, I think. And then the worker co-ops, which is my one of my passions, I guess would be a good word for it. If you think about a worker co-op, again, similar to what I was saying about a credit union, but this time it's a business itself that's owned by all the employees, right? And we also know, those of us who study wealth, that business equity is actually one of the larger components of wealth. And yet we know that people of color and women are not really given the same access to business ownership. So if we can't or don't or won't, and maybe we don't want to have just single proprietors trying to own a business by themselves, what about if employees, if people who are the ones doing all the work actually own the business as a co-op? Again, the co-op provides that democratic decision making. That means that the assets are democratic. You decide democratically how to handle the assets, how to handle the work rules, etc., and then you can do more. So a cooperative home care associates, our largest worker co-op, took a very low wage, low skilled work, home care, right? Professionalized it, made steady work out of it, gave people an ownership share in the business and a say in the decision making, and in addition to that, provide good wages now for an industry that was known for bad wages and for contingent work. Members also get retirement funds. That's another kind of wealth asset. You get, what's it called, a dividend, patronage dividend back every year that the company, the co-op is successful and makes a profit. So you not only have your business equity, you get a dividend back on that equity, you get a good job at a living wage with job ladder support and retirement funds, etc. And of course that also helps to stabilize the community because most of the members of a co-op live in the same surrounding community or near the community. So then you have people who have now a steady job, who have a little bit of income, a little bit of an asset. They can do more with that. Sometimes they can even become a homeowner, especially if you connect it with cooperative housing. And then you also have a thriving business that anchors the community. Because anytime you have a thriving business that's giving back and recirculating funds locally, buying from other local businesses, getting supplies from other localities, maybe working with the credit union too, right? You get this multiplier effect, more things are gonna happen in that community. Sorry, let's take a breath there. And as you see where I'm moving with this. So again, you think of a worker co-op as not just a good asset for the people who are members, but a good community asset, again, because of all the things that it connects with a community. And so I've been trying for us to think more broadly about that instead of worrying about any individuals becoming wealthy and millionaires and closing the wealth gap that way, to let's think about this broadening so that we can have almost everybody be prosperous in some way and connect this group asset, which is the co-op or some kind of community ownership, with the community asset, meaning the way that it expands out and does other things and helps facilitate other asset building and quality of life things in a community.
So